Hey, what's going on, everyone? This is your blockchain news update. I'm Cameron, your host for today's show. We're going to review some of the top news highlights from last week so you can stay informed on the top highlights. So please hit that like button and subscribe to help grow our network into the biggest momentum trading channel for crypto. Now, on to the show. So, what's going on, everyone? Let's dig into some of these top highlights today. And just in case y'all weren't paying attention, last week, uh, Congress, the House of Representatives, have passed the infrastructure bill. It's like I think it's like $1 trillion or something like that. Um, but the most importantly, what I want to dig in here is how it's going to affect you, the investor, and how it will affect your tax requirements. Okay, and this is some big news, people. So let's go over here and transition to my screen. 1 second here as I bring this up, and this is what's really crazy is these Congress doing whatever they want naturally. Um, you guys, I mean, I'll let y'all decide how you want to take it, but I'm not a fan of any more IRS intrusion. So let's just take a look here. This happened last week on Friday. All right. House sends infrastructure bill with crypto tax provision to U.S. president. Okay, passed with bipartisan support on Friday night. Okay, this is again. So basically, the reason why I don't like this is controversial is an understatement. As it says here, controversial cryptocurrency tax reporting requirement. Okay, and the reason why this is so controversial because the law is so broad. Okay, let's see what it says here. Specifically, this is from CoinDesk. It's saying the crypto industry was concerned about a tax reporting requirement within the bill that sought to expand the definition of a broker for IRS purposes. The reporting requirement would see all brokers report transactions under the current tax code. Okay. Industry proponents worried that the definition would be too broad, capturing entities like miners and other parties that don't actually facilitate transactions. Yes, anytime the government wants to step more into our life is just not a good thing. Okay, yeah, and it says right here the law was written nearly 40 years ago to apply to in-person cash transaction. Literally, this came from the drug war, for the most part. To stop drug money laundering. Essentially requires recipients to verify the sender's personal information and record their social security number, the nature of the transaction, and other information, and report the transaction to the government within 15 days. Okay, oh yeah, and just to let you know, this is a felony, people, a felony, okay? So it's just crazy. It's like, I mean, obviously, it's not set in stone yet because it still says here, the bill's passage in the Senate. This just was passed from the House of Representatives, and so I mean, if you can, write to your senator, let them know that this is not a good idea. That you know, whether you're left or you're right, whether you agree with this infrastructure bill or not. Write to your senator if you can and let them know that this bill is not good. This little rider that they have attached in here is a no go, man. It's definitely a no go. Tell me what you guys think in the comments below. Is it a yay or is it a nay? Is this something good for the industry? Is this good for the individual retail investor? I don't think so, and I don't think it's good for the industry here in the States and globally. So let me know in the comments below what you think, and whether it's good for the industry or not. Alright, y'all, have a good one. Okay, what's going on, everyone? Let's get into another article here from CoinDesk. If anyone was paying attention to this news that came out last week, on Friday, I think the 5th was Friday, I'm not sure. Let's see here. Yep, on Friday. So U.S. stablecoin report gets mixed reviews from crypto industry. This is coming straight from CoinDesk. Um, the president's working group on financial markets. This is from the Biden administration. They have developed a report, obviously, that just came out, but they want to put stablecoins under federal supervision. As everyone knows, well, maybe not everyone knows, but there, again, obviously, there's no federal framework around stablecoins. Everything is done primarily at the state level, and that's how the industry works so far here in the states. Like Tether, right now, they're banned from the U.S. because they have to get a charter and it's expensive and everything, right? So anytime there's more regulation, which is good, we do need some regulation, but we really want to be wary of overreach. So let's just dig into this article and see what's going on. Okay, so as it says right here, House sends infrastructure bill with crypto tax provision to the U.S. president. Whether you're for the infrastructure bill or not, that's up to you. But one thing we already talked about that. I'm tripping. Okay, so yeah. So, anyways, the article is just talking about is it long overdue? At the federal level, probably, yeah. Yeah, it probably is. You know, but here's the thing. There's in the article, it's talking about how a lot of different regulators want to step in here. I mean, you have the SEC, the Treasury Department, the commodity futures, whatever that industry. So I mean, there's a couple of different regulators that are gonna for just licking to get their hands over to to get some more oversight, right? So I mean, obviously we do need some. I mean, some regulation, as it says here, like the global stablecoin market is currently worth about $134 billion and continues to grow. And then, so obviously we do need some federal regulation, and not just patchwork of state to state regulations, for the stablecoin market. So that's basically. It's not, the article isn't pro or against this report, but again, it really is just talking about how. I mean, obviously, this is in the first iterations, of just the president just looking at this administration, but that's what I was looking for, the Commodity Futures Trading Commission, that one as well. So, I mean, obviously, there's probably going to be some regulations coming up, but like anything in the government, it's going to take a long time. So, during this administration, during the Biden administration, will we see some sort of federal regulation? It's possible. I mean, obviously, they've set the stone. They already have the working report coming out, right? So, is it likely during this administration? Possible, yeah. I would say right now, today, 50% chance that we get some sort of regulation out of Congress and specifically the Senate. But let me know in the comments below what you think, if we're going to see some regulations during this administration. All right, y'all, have a good one. Okay, what's going on, everyone? This is just a follow-up video to my last video that I just talked about, the U.S. stablecoin report from the President's Working Group. And fresh off the press this morning from CoinDesk, this morning again, is that the banking industry likely to capitalize on stablecoin deposit demand, says Morgan Stanley. The stablecoin market cap has grown to $137 billion, up from $20 billion a year ago. And let's just dig right into this article. This is just a really quick video and just a quick some attention that I believe needs to be shown, some focus needs to be shown on. So let's just dig right into this article. So, as like I said, banking industry likely to capitalize on stablecoin deposit demand, says Morgan Stanley. And it says right here that I think this is really notable. What it says from Morgan Stanley is that obviously stimulus from governments and central banks have led to risky assets reaching all-time highs, and cryptocurrencies are no different, Shaw said. And this is Sheena Shah, Morgan Stanley's lead cryptocurrency strategist. Okay. Cryptocurrencies are trading similarly to risky assets with the support from leverage growth in their markets, she said. Shaw notes that institutional investor interest in participating in the upward price momentum is building, adding that Bitcoin's dominance is slipping as alternative coins outperform due to their lower dollar price and, keyword, potential use cases. Okay, so for all the Bitcoin maximalists out there, let's see. And it says the battle of the blockchains is likely to continue as each picks up market share, Shaw said, noting that stablecoin issuance has risen 20 times since 2020. As more institutions such as asset managers, exchanges, and corporates decide to buy crypto, Bitcoin units will end up in the hands of fewer participants, which will result in centralization, which is definitely true. I mean, obviously, there's only so many units, and the supply side for Bitcoin is extremely small, as stated by Plan B stock to flow model. One last report right here. Just, if anyone didn't know, is that online trading and brokerage company TradeStation Group said Thursday it will become a publicly traded company through a combination with a SPAC, specifically Quantum Fintech Acquisition Corporation. TradeStation began offering crypto trading to its customers in May of 2019, and last year partnered with exchange ErisX to integrate ErisX order book into its subsidiary, TradeStation Crypto said. So let's dig right into this quick report, an article coming from CoinDesk about the merger of TradeStation going public. So we have this SPAC, and this is what's crazy is that TradeStation parent company Monex will own 80% of the combined company through this merger and this SPAC. So it's saying right here. It's saying it has an enterprise value of approximately $1.43 billion. So this is a big company, man. This is not anything to be to look lightly and to look down on. I mean, and it says the deal here will provide $360 million of cash before paying expenses. Again, assuming there's no redemption of any public shares immediately. This total includes $201 million in cash held in Quantum Fintech's trust, and then a couple other $100 million through a private investment, private sale, whatever. And then another kicker to that pipe deal is that $50 million is from Monex and $50 million is from Galaxy Digital, plus investments from XBTO and some other asset management companies. So definitely some big news. TradeStation is going public. Let me know in the comments below if you think this is a good thing, a bad thing, or anything. So hit that like button and subscribe, and let's go to have a great week for crypto, baby. Good day, good night, good morning, wherever you are in the world. Have a great day.